This is Tommy Ruke. Welcome you to the Business Auto Focus on Law, Auto Liability, Part 1 from the previous presentation, particularly as it deals with federal regulation. If you have questions during the presentation, please type them in the chat window. We'll answer them if time allows, or if not, after the presentation, we will email you answers, and we'll share your questions with all the attendees and answers if it is of a nature that we feel that all would benefit. If you experience auto problems, please send us a note in the chat window or call 800-741-4084. We will attempt to correct the problem as soon as possible. Insurers who have a commercial auto exposure. These are businesses. These are people who use autos to transport their own property or employees to job sites or to customers or to distributors. We have insurers who transport others' property. Those are the for-hire truckers that deliver property as a part of their business or transport people for hire. Those are your taxi cabs, your public levy, your buses, and those things. So the transporting own property and employees, those we commonly call a private carrier, meaning that their business is not transportation of items or for people. Their business is selling furniture, delivering soft drinks, delivering building material to job sites. They're taking their own property or employees in commercial vehicles to achieve delivery of their goods to their customers, or so their employees can work at the job sites or come to work where needed. We have the transportation of other property. That's the for-hire truckers. Those are ones whose business is transporting property of others. They get paid not for selling the property, not for manufacturing the property, but for transporting the property. We also have the transportation people for hire, again, buses, limousine, taxis. They'll use all types of autos. Some will have a personal private auto, the private passion auto, as a part of their business. Typically that'd be sales reps, or in some cases the business themselves furnish certain executives personal autos, but they're used as a part of their business. We have a lot of people who use pickup trucks. These are service units. They take employees and tools to job site, very common in the construction industry. We have larger delivery units that the furniture companies might deliver goods that are sold, that the soft drink company deliver their soft drinks to their customers, then a manufacturer of furniture takes it to the furniture store. Those are larger units, again, used most commonly for a private carrier, but also some for-hire carriers will have the larger delivery units. We have the big rigs. Those are the 18-wheelers. Those are common to be used when you're moving a lot of property over a long distance. This is the typical unit that a for-hire trucker uses, but also for private motor carriers who have to deliver their own goods over long distances. This form that we're dealing with will address the exposure for liability for any of these vehicles. As we talk, when we talk about setting up the policy, we'll point out this. An auto crash happens. If it was your insured, what would they expect? Coverage. After all, you told them they have full coverage. However, to have coverage, the factors that we need to ensure is, for liability, did someone who qualifies as an insured in the policy cause the crash? In other words, their actions did damage to the public. Was the crash accident caused by a covered auto? Meaning the auto in the crash, did it raise to the definition of covered auto on the form? And third, was there enough limits in the policy to address all the damage done by the covered auto that the insured used or an insured used negligently to cause damage to the public? We don't spend a lot of time here setting the limits, but that is a discussion I have often. I have had clients insured ask me, how much limit should I have? My standard answer to that is, how bad you're going to hurt somebody. But really, not only that, how much assets you have to protect. In other words, at what point in time would the damaged party seek to not accept the limits in the policy presented by the insurance carrier to get the case closed, but would still pursue the customer for payment over and above the limits. We are not talking about the limits to meet the minimum financial responsibility of the state or the federal government. We're talking about limits that might be needed over and above that to protect the assets of the insured. So this is a question that you would have to deal with all insureds, but basically it is to protect their assets, and are there enough dollars there that the plaintiffs, the damaged parties, would accept. We have other coverages that also this form will allow, and that's physical damage coverage. That's damage to the units that the insured is operating. We're not going to talk about that in this session. We are going to talk about uninsured motorist and MedPay. We're going to do that in the last section. The business auto coverage form, it addresses insured's liability other than professional and general liability. In fact, we'll discuss later in the presentations how the general liability and auto liability, quote, work, unquote, together, meaning where does the general liability stop, where does the auto pick up, and then when does the general liability pick up after the auto policy, this policy stops. It's very important, and in most cases it's our recommendation, even for more premium, to have the auto and the general liability to be written with the same insurance carrier, because in some areas, particularly loading and unloading, what's mobile equipment, completed operations, there is some differences, or very small differences between auto and GL coverage. We'll talk about more of that later when we get into those particular exclusions to show you how they work together. To protect the insured's asset that meet the definition of auto, that's the physical damage coverage that we're not going to address in this session. The insured expects the policy to respond when an accident happens. The program will address liability protection provided by the business auto coverage form. You must understand that to meet the expectations, the insured is properly addressed by name and legal type. That's item 1 in the index sheet. And the selection of symbols to define what will be a covered auto and what coverage will apply to those covered autos. Again, that's item 2 in the deck sheet. If these 2 steps are not taken, then the policy will not respond. So going back to that crash that we talked about, the insured happens. They turn the claim in, the adjuster determines if they're covered or not. What they'll look at is item 1 and item 2 of the deck sheet. Item 1 will tell them who has protected, in other words, who caused the damages, and that person who caused the damages qualifies insured in the policy. And second is, did the auto that caused the crash, was it a covered auto in the policy? If these 2 things are not done properly, then there's no coverage. So we're going to spend time in this session talking about setting the policy up properly to make sure that all insureds that we want to be covered are properly covered, and to make sure that the covered autos, the autos that the insured uses will raise to the level of a covered auto so that the policy would respond in time of need. This is the business auto deck sheet. We not only have the policy number, we have the insurance carrier's name, and we have whoever produces it. The name insured, that's the important line here. Anyone listed, any legal entity listed on the name insured line here in item 1 will later qualify as a U in the policy. We do then have their mailing address, and we have the effective time of the policy. There are forms of businesses. This is how they're structured. If it's a corporation, typically ended in Inc., INC, Ruke, Cargo, Transporters, Inc. If it's a partnership, it could be Jane and Joe doing business as J&J, a partnership. That is not styled properly, but a partnership are 2 people who join together to do businesses. One of the reasons why you can find out if the partnership's a legal entity is, do they have a separate tax ID number? Do they have assets owned by the partnership? Are there K-1 reports sent to the owners of the businesses? We have an individual. Individual, someone with a title after its DBA. An individual is the insured. The DBA does not limit coverage or extends coverage. It's the insured. And then we have the limited liability company, which is ended in LLC. It's very similar to a corporation from protection of the public, and it is a partnership as far as the distribution of assets and the taxing. The others could be a condo association or a professional liability company like lawyers and those kind of things, or a not-for-hire like the Boy Scouts or churches. But these are the entities we have to. So we have to ask our insured, what is your business and how are you set up? And what's the name that you're operating in and who owns the assets of your business so that we can properly name them in item 1. So you in the policy is any entity listed as a named insured on the named insured line on the deck, any and all. So you want to name the business there, the operating entity there. When we look at what's the best for coverage, and here's what we're talking about, not necessarily the best for the insured because we can style to cover all the insured exposure, but so that we know when the policy is called upon to respond to make it the best to determine what coverage is purchased and what coverage we owe. The corporation will end in an E. That's the best because then we are dealing with the business only. We don't look at the owners of the businesses as far as their personal activities. All owners of the businesses are already covered. Later the policy will show you where without naming them here. Limited liability company, that's the same as a corporation. The only real difference between those in a practical matter is how the taxes are distributed. And that is for the individual person and the business themselves, how they handle their owners of the businesses for distribution of taxes. Again, that's the entity itself. A partnership's a legal entity. But here again, we have some discrepancy in how to set it up. It's our strong recommendation, my strong recommendation, not to name the partners on the name insured line. If you put Jane and Joe doing business as J&J Distributors, a partnership, the problem you have there is you have 3 legal entities. You have Jane, you have Joe, and you have the partnership. All that needs to be listed on the name insured line is the partnership. J&J Distributors, a partnership. The Jane and Joe are covered already in the policy for owning the partnership, even though they're not listed here. We want to keep that clean as possible. The purpose here is we don't want to inadvertently pick up their personal exposures in the commercial auto policy when not intended to. So do not name the partners on the name insured line, just the partnership itself. If it's an individual, Tommy Ruke doing business as Tommy's Distributorship. That's a individual. It's a proprietor. The DBA has no relevance in the legal entity status. Tommy Ruke is the legal entity. So in those cases, which the corporation, LLC, and the partnership doesn't extend to, but we also now have to worry about the personal activities of the individual because depending on the symbols we use, the personal activities could fall under the policy that we intend to only cover the business. So we want to take time to set this up. Ask the insured. A couple ways to do it. Ask for their tax ID number. Most of you write their work comp anyway, and you know they have a tax ID number. What do they use as a trade name in the yellow pages or on the website? And you even can check, and most people, agents do this, check with your Secretary of State to see how they're properly structured. Take time here to do those things. Don't just assume that what they tell you is also accurate, particularly smaller risk who maybe haven't done this properly, set themselves up properly. But again, put the business there itself and the concern you would have if the individual is the business. If a name insured is an individual, the policy must consider activities of the person, meaning their personal activity, as well as a business. This applies anytime an individual is on the named insured line. So you have to put the individual name if you're dealing with a proprietor. But don't put the owners, the managers, the stockholders, the partners' names on the corporation, limited liability, or partnership. Just put the entities themselves. There's no need to name the owners of the business, corporation, LLC, and partnership, for the liability arising out of the ownership of the legal entities on the name insured line. You give them no more coverage than they already have in the policy. Of course, if the name insured is an individual, you have to put that name there. The DBA trade name is not a legal entity. The individual and all of their individual activities must be considered. So take time to style the policy properly and find out who the business operates that you're insuring operates and what the legal entity status that they operate under. So this is where we put it in the name insured line. Item 2, these are schedule of coverage and covered autos. This policy provides only those coverages where a charge is shown in the premium column below. Each of these coverages will apply only to those autos shown as covered autos. Autos are shown as covered autos for a particular coverage by the entry of one or more of the symbols from the covered auto section of the business auto coverage form next to the name of the coverage. So we're talking about putting the symbols here. And again, we're only looking at the liability section. Liability would put a covered auto, then we'd put the limits, and there'll be a premium. Again, we've already discussed what limits should be there. You also have the personal injury protection in states that have no fault. Some states allow for additional personal injury. Some states also allow for, particularly Michigan only, property protection. Again, this is the form that's used for all, filed by ISO for all uses, all company. Then we have auto med pay, and then we have the Virginia med pay expenses, and then we have uninsured motorist, and uninsured motorist and underinsured motorist, which will be not included. The main purpose we're going to deal with here is the liability section, which is item 1, and the covered auto. The states will determine what you need for personal injury or added personal injury. We'll talk later about med pay and uninsured motorist in the last sessions that we're going to be doing in addressing the business auto coverage form. So we're talking about putting symbols on the covered auto column and selecting the proper limit, which will have a premium developed. So here's how the policy wording. Various provisions in this policy restrict coverage. Read the entire policy carefully to determine rights, duties, and what is and is not covered. That is to tell the insured that it's their duty to understand what we're delivering. However, we all know that insurance is confusing and baffling. In fact, that's our annuity. We want to keep people confused and baffling. I'm being facetious here, but most of the time the insured doesn't understand all of these factors. So therefore, even though we tell them to, this is not always a way to get out of an obligation to meet all of their needs. So we have to meet their needs and then provide the coverages and explain the coverages to the insured before the need arises if there's any areas that are not addressed properly. So we do tell our insureds to read the policies, and we hope they do. And then we hope if they have any questions, they can ask you about it and you can answer it. Throughout the policies, the word you and yours refer to the name insured shown in the deck. Again, that's any legal entity on the name insured line. The words we use in ours refer to the companies that are providing the coverage. Other words and phrases that appear in quotation marks have special meaning. They're in Section 5. Later, when we talk about coverage themselves, I'm going to look at not only the words, but bring the definitions up so we can look at the words and the definition at the same time. It's kind of like a mystery here because we tell the insured that they have certain things, and these, what's an auto, who's an insured, what's covered, pollution, cost, and expense, yet we don't tell them what that means until they get to the end of the policy, which is Section 5, which is the end. I'll bring those up later so we can address them at the same time. Item 2, this is where we have covered autos. This is, again, that's what we just looked at, where we looked at liabilities and limit. Item 2 of the deck shows the autos that are covered autos for each of your coverages. The following numerical systems describe the autos that may be covered autos. The symbols entered next to a coverage on the declaration designate the only autos that are covered autos. So unless we have it defined properly when the crash happens, the auto that caused the crash must meet the definition found in the symbols that we're going to talk about here placed in item 2, or there's no coverage. Also, I'll remind you, you can have more than one symbol for any particular coverage, and we'll talk more about that as we go through the presentation. Here are the symbols. Any auto, period. All we have to do when the crash happens is say an auto caused it, meaning not mobile equipment, not a general liability trip and fall, but the cause of the case, the cause of the accident was caused by any auto. There's no need for the insurance carrier to know about the vehicle prior to the crash. There's no restrictions in what is or what's not covered. It's an auto, period. Whether it's an auto owned personally, if it's a proprietor, or by the DBA, it's an auto. So this is the broadest coverage possible. It matches what we are accustomed to providing in work comp and general liability, where we cover all of their employees for injuries if you're an employer, or we cover all activities in the general liability policy for your insureds in those areas, as no matter what the classification is. Any auto matches that. So at the time of need, only thing the adjuster has to determine, was it an auto or not. Symbol 2, owned autos only. Oh, by the way, excuse me, symbol 1 can only be used for liability. Owned autos only. Own those autos you own, and for liability coverage in trailer you don't own while attached to a power unit you own. This includes those autos you acquire ownership of after the policy begins. So again, the triggering of coverage here is, does the insured own it at the time of crash, time of accident, the time of NIL. So in this case, the adjuster has another step. First off, here's the auto that caused the crash. Now, let me see who owns it. Who's the title name in? And if it's owned by the insured, then it's covered. If it's not, then it's not covered. So the key here is, do we cover, or do we list all the autos that the insured owns? And so that would be a requirement at time of loss for the vehicle to be owned by the insured. 3 and 4, particular coverage, owned private passenger vehicles only. That's if you're trying to have a risk that has larger trucks and you're trying to write those units on a separate policy and then still cover the insured for, in the broadest possible way, for the owned private passenger vehicles. I'm going to suggest later those could be used for MedPay also, because we can use different symbols for different coverages. Owned autos other than private passenger, meaning these are covering just the commercial risk. Here would be very useful to get rid of the personal autos, particularly if you're insured as an individual, not covering their personal exposures, but just covering the autos that are involved in their business. The most common one we'll use, obviously, for liability in this page is any autos. The others are usable, but the trigger coverage is if the insured owned it at the time of accident. These are 2 specialty coverage, owned autos subject to no fault. Those are the states that have a no-fault law, and owned autos subject to compulsory uninsured motorists. You've got to understand, that's only compulsory uninsured motorists. Some states require uninsured motorist coverage at certain limits, and that would be 6. Most often you're going to find that we'll use a different symbol for uninsured motorists where there's a selection of the limits you can have and selections to reject or not. But this is only for compulsory. Again, key cover here is, does the insured own it at the time of loss? 7. This will be used for all coverages specifically described autos. Only those autos described in item 3 of the deck for which a premium charge is shown. So in the case of 1, all you had to prove was an auto. In case of 2, 3, and 4, all you have to prove to have coverage, did the insured own it at the time of loss. But if you use symbol 7, which is used commonly, the adjuster has to take additional step. Not only do they have to find out if the auto in the crash, they'll have to go and see if that auto is scheduled in the policy on item 3. If it's not scheduled there, then there's no coverage except for potentially newly acquired, temporary substitute, or hired car if the policy provides hired car. This is important discretion here, because this is the only thing that we have to do as an agent, as a delivery system, to have coverage, and that is to make sure the vehicles are scheduled in item 3, are described. The other symbols that we use in any auto or own is up to the insured. Was it auto, and did they own it? Here we have a concern, so we need to make sure when we have the schedule, the specifically described autos only as the coverage symbol, that we insure all the autos the insured wants to insure at time of crash, and we list them in the policy. Hired autos only. On those autos you lease, hire, rent, or borrow. These do not include autos you lease, hire, rent, and borrow from employees or partners, if you're a partnership or members of the LLC company or members of their household. These are hired autos. There are two ways. The insured needs a vehicle to do services for them, so they go down and lease a vehicle from Ryder or from Hertz, and they use that vehicle as part of their business by putting their drivers on it to do those deliveries. Or what happens in the trucking arena, the motor carriers arena, often the insurers will hire an auto with a driver and use that auto as a part of their business, even with their operating registration extended to that hired auto that they're on. So these are autos they don't own, they're hired. The insurer takes domain of the auto. They're responsible for it. They operate it by their driver. They have to control it. That's the key here. It's a part of their business, and here the insured has control or should have control over those autos. If you have any auto, then these hired autos are included. This is a subset. I've seen some carriers who write symbol 1 and comma 8. That's redundant. That's like saying you have windstorm coverage and tornado coverage or hurricane. It's the same situation. Like hurricane and tornado is a subset of wind, then also any auto, this is a subset of a type of auto hired. It's included in symbol 1. However, if you have any other symbol, 3, 4, or 5, or 7, to cover these autos that the insured hires, lease, rents, or borrows, you must have those added to those symbols. Again, remember, you can put more than one symbol on the symbol line. So to have coverage, again, for the 2, 3, 4, the insured has to own it. Has coverage for 7, it must be specified. These are autos that are not owned nor specified, and therefore the insured would still have coverage for it. And there'll be a premium charge developed. We'll talk about that. Non-owned autos only. On those autos you do not own, lease, hire, rent, or borrow, meaning your insured has no involvement with this. The most common one that I use here is you have a contractor and they hire someone they engage the services of a motor carrier to deliver fill dirt to the job site. The insured does not own those autos. They don't operate those autos. It's not leased or borrowed. They have no domain of them. They have no control on them. But they could be named in the suit not because of their insurance actions, but because of the actions of the auto, because our insureds allowed them to be at the job site to haul their goods. This is the non-owned exposure. One of the more common use of non-owned is employees non-owned, and this is important here. A lot of times your insurers will have employees that use their employees' own personal vehicles to pick up the mail, to make sale calls, or in some cases in the construction area they might have the mechanic or the employee to have their own vehicles that they carry the tools in. This coverage would cover the exposure of your insureds for these autos. They don't own them, they're not lease hired or borrowed them. Their employees are using those vehicles on behalf of the insured. The insured could be named in the suit because of the employee use of those vehicles, and they will be protected, your insured will be protected from these actions if you have non-owned auto coverage. Again, it's included in any auto, again a subset of an auto. It's not included in the other, you have to add it to it. And the coverage here would be in that coverage over and above to protect your insured for the coverage that's on the vehicle that the individual is using, whether it's the dump truck or whether it's the personal policy on the salesperson or on the mechanic's policy. So again, any auto we'll use for liability, there's no limitations of what it is. 2 and 3 and 4 are owned autos. 2 any owned autos, 3 and 4 are private passengers and are not private passengers. 7 has to be, their triggering coverage there is the insured owner. 7 has to be specified only. If it's not found in item 3, then there's no coverage. 8 and 9 can be added to 2, 3, or 7 to extend coverage for autos that the insured might hire, lease, rent, or borrow, meaning use as a part of their business that they don't own, or they could have other people using the vehicles on the insured's behalf. Again, salesperson, mechanics, other contractors, are people hauling on behalf of your insured. Those are the symbols you have to use. Any includes all of those. We have one more. And this is a GLBA consideration. This is back in 04 and 07, 04 for the general liability, 06 for the business auto policies where they change the definition of mobile equipment, that some of them have to be licensed for the road. I have never seen this used. I don't know how it would use, because if we use any autos, these are covered with any autos. If we use specified, we don't want to extend credit to any or coverage to any vehicle we don't know about. But this is here where there's a gray area. It could be, and I've seen it used here, it could be like you have in certain places in the Midwest. You have farm equipment, combines, and those things. And later we'll talk about the definition of autos in the next hours. But here that combine might be considered an auto in some states because it might be required to be licensed for the road in that state. Yet in another state it could be used for, it is not required to be licensed for the roads, so therefore it is not an automobile. And so this would cover those gray areas where you're not sure if it's mobile equipment or auto. You're not sure when it's subject to compulsory financial responsibility, meaning insurance or other insurance laws. And since it's a gray area, or it could change it from one state to other, to protect those unique type of insured, you could give them 19, and that would cover the vehicle. In one case, when it's mobile equipment, it would be covered in the GL, but if they use it in the state that has to be licensed, now the coverage will be back on the auto policy. So this is something that you'd be very, very limited use for. It's uniquely for that type of a risk. Other than that, it's already, these equipment's already covered in any auto, and in most cases we'd want them specified. Again, we'll go through more of this when we look at the definition of auto and mobile equipment later in our presentations. So to provide protection for liability for all exposure, number one, any auto is best for the insured. How about the insurance company? Do you know about all these, know everything the insurance is doing? Do you have adequate rates, and are you willing to audit? Here's the subject here. This is an auditable policy. So after the policy is over, the insured has up to 3 years to go and look at the actual activities of the vehicles the insured might use and make any premium adjustments. That's the key part here. So we'd want to make sure that if we have any auto, that we going in, so there's no surprises in audit time, that we're listing all the vehicles that the insured has in the policy. It's not necessary for coverage, but to make sure that we collect the premium up front and we know about it, the insured has no surprises at audit time. You could exclude part of the risk, that is to get rid of the personal vehicles, individuals. You could try symbol 4 to get rid of the personal vehicle, or there's a manuscript symbol possibility, and that's the CA 9954, where we could cover other vehicles, not private passenger vehicles, to get rid of the personal exposures. That is a concern also here. So the possible problem with symbol 1, insurance company, personal autos, do they know about all the ones you insured? They will collect a significant premium up front. For the insured, they're subject to the audit. So later they can come back and have a premium adjustment just like you do in work comp and general liability. Yes, it's the best for the insured, but it could be a problem if you're insured as an individual, because now you're not only picking up the vehicles used in the business, but you're also picking up the vehicles that they can use personally. So you would never want to use symbol 1 when you have an individual as an insured without making sure that all their vehicles are covered, which typically would not. Most of the insurance carriers who write in commercial auto do not cover personal autos on the commercial policy, so you'd want to separate that. So you would not use symbol 1 if the named insured on the named insured line is an individual, either because they're DBA or we inadvertently put the owners of the businesses on the named insured line. But for the business themselves, it's important. As an insurance carrier, your concern is, have you underwritten all these vehicles, and have you collected the proper premium and being willing to audit? So here's the next question. Symbols are important because they define, and please put in the chat session either A, B, and C. A, who's insured. B, which autos will be considered a covered auto. C, none of the above. So we're talking about symbols now. We're talking about what's a defined auto. So put in the session, in the chat section, A, B, and C. The symbols tell you who the insured is. The symbols tell you which autos will be considered autos on the coverage form. Or C, none of the above. We'll give you a few seconds to do that. Right. It defines the covered autos. That's the what symbols do. So at time of loss, the insured has to have the vehicle causing the crash to raise the level of the covered auto, and that auto must meet the definition in the symbol section. All own, that's symbol 2. Liability must own at time of accident. No coverage for not own. 2, 8, and 9 do not equal 1. If your insurance carrier tells you that, then tell them to save the ink and just put symbol 1. 2, 8, and 9, yes, covers all autos hired and not owned. There's very gray area, but it's a difference in later when we cover property where you have the special coverage form or the name coverage form. Here, that's the difference here. So symbol 1 is the preferred. 2, 8, and 9. If that's all you can get, it's better than symbol 7 because, again, the insurer doesn't have to do anything but own it, hire it, or don't own it, and it's involved in their business. Only private passenger 3, this could be used for MedPay, in some cases possibly uninsured motorists. All insurers have exposure from non-auto, so we must use 8 and 9 for liability if we're using any other symbols but 1. So that's a consideration you want to ask for to make sure that you've covered all your insurance exposures. Item 3, if coverage symbol is 7, specifically described vehicles only, then the vehicle involved in the accident must be scheduled in item 3. 3 to meet the definition of covered auto. Item 3 to meet this covered auto. If it's not scheduled there, then there's no coverage. The other possible 2 coverage, though, what is it newly acquired or is it temporary substitute? So when the crash happens, we talked about before, the insurance adjuster looks at the item 3. Was the vehicle involved in the crash listed there? If not, then there's no coverage except maybe newly acquired or temporary substitute. We don't have to go to that extent if we're worried about any auto. In this case, we would have to have some of the same position if it's owned to find out if it's owned, that's newly acquired, but temporary substitute would be even for the symbols of owned. Coverage for autos that are acquired after inception of the policy, thus not listed in item 3. The insurance carrier has not been notified about it. These provisions allow the auto to be considered a covered auto. Either units added to the fleet, increased number of units, or units replaced an insured auto that's in a trade-in. So we have the 2. We start with 4 vehicles, insured adds 5th, that's an additional vehicle. Or we have 4, they trade 1 in, and we still have 4, but the new vehicle is not listed on the policy yet, nor is the one that is involved in the addition to it, and we have a crash happens, and since it's not specified, it's not covered yet, but it might be if it meets the terms of newly acquired. And here's the wording. Owned autos you acquire after the policy begins. It's owned. It's not leased. Again, going back to our truckers situation, it's not leasing on our operator. It's owned only. If we have symbol 1, 2, 3, 4, 5, and 6, or 19, then the coverage is to the policy in subject to audit. One's any 2, 3, 4, 5, and 6 is owned. So this is when we cover any newly owned autos. They're already covered without the insurance carrier's notification. But if we use symbol 7, is entered in the next item 2 of the declaration. Auto you acquire will be a covered auto for that coverage only if we insure all autos. 2 things here. This is not only liability. The same coverage we'll look at when physical damage in another sessions. So you got liability and physical damage. We already cover all autos that you own for that coverage. That is when you add one to the fleet or it replaces an auto that you previously had coverage. So let's talk about that situation. If your insured goes out and buys the 3rd or the 4th auto to add to their 3 autos you already have, what the adjuster will ask the insured is, well, what are all the autos you own? If it's a business, usually that's no problem. But if it's an individual proprietor, are you insuring their Ford or their Chevrolet or their Cadillac that they use personally? If they don't, then they don't have any coverage for that newly acquired vehicle. That's the concern you have. Most of the time, if it's a true LLC corporation, we've scheduled all those. So we don't have to worry about that part of it for the newly acquired because we're covering all those. We also know in most cases that the insured cannot get it out here. However, there is a gray area that you need to be considered does you insure all the vehicles that the insured operates, the legal entity operates at the time of crash, to have this newly acquired vehicle to be considered a covered auto. This is usually not a problem because that vehicle is already on the schedule of the policy and is covered for liability we traded in. The other key here, though, is how long you have coverage for. First off, is it a covered auto? Meaning, are we insuring all the vehicles the insured owns if it's an additional to the operation? Or if it replaced one that that's previously owned that we typically would insure under item 7, then and the insurance company had to be notified for it yet, then it would raise to be a covered auto. But that coverage is only for 30 days. It's 30 days after signing for it. So it's a limited period of time. And that 30-day section can run out. And particularly if you have units that need to have things added to it, like toolboxes, lift gates, certain tires, the name on the side, certain communication equipment added to it. So the 30 days runs out too here. So it can be covered for the first 30 days, but not after the 30 days if it had to go back on the 32nd day to a paint shop to have it painted before it puts on the road. The problem you have here is that the insurer typically does not tell you about the unit until they're ready to put it on the road. And sometimes they could take more than 30 days to make it able to be ready on the road. The good part about this, very rarely will the insured be able to get the unit out of a dealership, to get it from the person they buy it from without some notice of coverage. Because most of the dealerships, most of the units that you insured would buy from a third party will make sure that when they transfer the title, when they give it to the insured, they have the proper insurance coverage. But this is the newly acquired. My strong suggestion to you is if the insured calls you up and says, I didn't have a crash, the vehicle is not scheduled in the policy, however, I just newly acquired, do I have coverage? What you've got to say is, I don't know, it's a possibility, I'll let the insurance adjuster handle that, and they'll ask you questions, answer those questions honestly, and you'll determine if you have coverage or not. So this is, again, if it's not specified, then it could be raised to newly acquired, but you have the limitations here of insuring them all or replaces one that we already insure, and you have the 30-day limitation. The next one is, see, certain trailers, mobile equipment, temporary substitute autos. For liability coverage only. This is for liability coverage, again, under the coverage form. The following type of autos are also covered autos for liability coverage. Trailers with a load capacity of 2,000 pounds. That is not the GVW. That's what it can haul. Those are what we commonly call utility trailers. This is where you have insurers carrying lawnmowers or skid loaders or something like those. Or they could have some kind of I've seen some added for making aluminum, bending aluminum, or hauling windows or things like that. Those are always covered by the insured if you have less than 2,000 pounds capacity. And they're used primarily for travel on the public roads, not office trailers or mobile home trailers. So this is the concern you have in those areas. They're already covered. You don't schedule them in the policy. Mobile equipment. Here is the definition between GL and auto. What this is, mobile equipment while carried or towed by a covered auto, meaning if the mobile equipment falls off of the vehicle, like the forklifts hanging on the back of the flatbed trailers that you see running down the highway, then that's auto. We handle that just like it's any other cargo that the insured might be hauling. If the cargo falls off and hits the car next to it, that's covered in auto, but we don't cover the cargo itself. That's covered in the cargo form. If that forklift falls off the back of the flatbed truck, comes loose running the highway, that's an auto claim, but we don't cover the forklift itself. Once it's off of the truck, then it goes back to general liability and consider it as mobile equipment. So that's, again, the area between auto and general liability. The area that we want to more focus here, though, is C3. This is the area that we deal with to determine if this vehicle that the insured had a crash with is, and we use symbol 7, is specified in the policy, but it's not required to be specified, but it's not specified, then it could be a temporary substitute. Only autos you do not own. That's not your spares. That's somebody else's autos, not your insured spares. While used with the owner's permission as a temporary substitute for a covered auto you own that is out of service because of, again, breakdown, repair, in for service, loss, or destroyed. So what we're saying here is the insured, one of the vehicles we have covered in the policy, if the insured cannot use it because it's broken down, It's having to be repaired. It's in for service. We lost it at the mall. We couldn't find it. Or it has been totally lost. We'll let the insured use another vehicle to take that vehicle's place as long as the other vehicle that they're using they don't own. Now, in the concern of any auto or hired auto, because this is the same thing if you have a hired, lease, rent, and borrowed auto, the importance here is these autos that are temporary substitute do not develop premium. For this, if you use symbol 7, then these autos would be considered autos because they're not scheduled on policy as long as the one that's listed in symbol 7 is out of service because of one of these reasons. The coverage time here is not days like the previous 30 days. The coverage time here, as long as the vehicle that the insured has covered on the policy is out of service. We'll let them use another vehicle to take its place. Again, if you already have hired and non-owned or any auto, hired or any auto, then these autos do not develop a premium. You already have the coverage. If you have symbol 7, this does extend it to the possibility that the vehicle that we have scheduled in the policy is out of service, so that you would have to show the adjuster where that vehicle was parked in the garage, the engine's in for repair, there's no tires on it, some reason that it cannot be used, then they'll allow this temporary substitute unit to take its place and it would have coverage. So specified 7 must be found in the policy at time of loss or no coverage unless it is neither required. Must meet these conditions to have coverage. All autos insured for coverage if you add one or it replaces an auto that had the coverage. Then you have the 30-day notification. Temporary substitute. Non-owned autos replacing a covered auto that is out of service. Those are the considerations here. At time of loss to have coverage triggered by symbol 7, autos must be specified in the policy or must meet one of these conditions. This is item 3 where you put the schedule of covered autos. This is what we list here. For other items here, though, beyond just the vehicle make, model, serial number we put here, if it's for physical damage, we would have coverage for original cost new. Territorial is where they're operated by areas they operate. Rates of operation would be 0 to 50 for local, 50 to 200 for intermediate, and over 200 for long haul. Business use is service, retail, or commercial use. Service is for taking the vehicle to a job site all day. Retail is delivering at individual homes. Commercial use is moving property from a warehouse to a customer or from a distributor location to a customer. Size, those are the GVWs. 0 to 10,000 GVW is light. 10,000 to 20,000 is 10,001 to 20,000 is intermediate. 20,001 to 45,000 is heavy, and 45,000 above is extra heavy. Again, age, depending on what age group it is, and then you have in some cases a primary factor and a secondary factor in the ISO rating manual. This is what you put here. The point that I'm bringing this out is that the description of the vehicle is triggering coverage. These other items here do not affect coverage, they just affect premium. So if your insured misstated the place the vehicle was garaged in because you could be in a lower rural area and yet they are not garaged there, but that's where the office is, then that premium could be adjusted. Or if they use it beyond certain radiuses or use it for other usage, they could be adjusted at time of policy end when the policy is being audited, and those are premium adjusted. So we want to make sure that we're accurate in that area. But from coverage standpoint, the come here is the vehicles that are listed here. But notice it says up here, scheduled covered autos you own. We sometimes miss asking the insured who owns the vehicles that we're scheduling in the policy itself. So therefore there is a need to ask them that question. If the insured does not own it, we can schedule it here, but we'd have to add an endorsement to convert it from a non-owned auto to an owned auto. We'll talk about those in the next hour when we talk about who's the insured provision in it and those certain endorsements to make the vehicle that's not an owned auto to be considered a covered auto and cover the owner of the vehicle. This is the schedule of hired, this is premium. If you have hired auto coverage, you'll have a premium development based on the cost of hire. I've had numbers of this, particularly in the trucking industry, where we hire the vehicles. But let me explain. This is when the insured is using those vehicles as part of their business. It's the cost of hire, what they pay Ryder, what they pay Hertz to have those vehicles. If you have symbol 1 or hired auto 8, you would have a premium development or a rating here that could develop a premium. Often we'll use an if any rate here, and you cost per 100. If the insured hires a vehicle like we do in trucking for independent contractors or owner-operator, and operate as a part of their business under an agreement with that owner, and the insured operates it just like it's own auto, this would be raised here. For liability coverage, if you have full responsibility for it and primary liability, that is the first section here. The second one is a number of days the equipment would be rented. Could be a premium discussion here for liability coverage where you have those particular types of vehicles. But it can be audited, and you would have a potential of the vehicle, the policy to be audited for the hired exposure if you have symbol 1 or 8. Recap. Name insured. Item 1 of the deck. The business auto whose assets are exposed to loss due to operating a commercial vehicle. We got to understand how the insurance business is set up and make sure that item 1 has the right name insured. Meaning, is it a corporation, LLC, partnership, or individual? A proprietor, a partner, are our main concern here because of the possible personal exposure brought under the business auto coverage form. We cover any auto as long as it's covered auto, no matter how it's used. So as a proprietor, we have to worry about them. They're individual, whether we have inadvertently put their name, if there's a corporation LLC, because they want to see their name on the name insured line, or if they're a partnership and we list the partner's name on the name insured line, we have to worry about the exposures they might have personally. This is why you do not want to list the owners of the businesses on the name insured line. They're already covered unless it is proprietor. So as a proprietor, then we have to worry about providing coverage to them and picking up the personal exposure. We can do that by using, as we talked about, symbol 7 with broad coverage or specified in those areas to get rid of that personal exposure. Other than individual, no need to name the owner of the business on the name insured line. There is protection for exposure for the owner of the business in the form already. Naming them could cause a problem because you're now extending coverage with certain symbols into the personal auto activity. Symbol recap. Numbers called symbols describe what will be considered a covered auto. What is the relationship to the insured with the auto at the time of loss? If the correct symbols are not used, then there could be no protection for the insured. The auto form is only liability form that attempts to limit areas of coverage by certain vehicles, meaning classifications in work comp and GL do not limit coverage without adding some limitation endorsement. Here we have. The term you have here is any auto covers any auto the insured uses. And so we worry about their personal vehicle if your insured is a proprietor or an individual is named on the insured line would pick up their personal exposure. These are the vehicles that insured would use as part of their business. You could use the CA 9954 modifying wording where you could have any vehicle only used in the insured's business, meaning not private passenger, not pickup if it's an individual. It's the best for the insured and you, the agent, to have the broadest coverage possible. But there is concerns about it. First, it's auditable, and second, going in, do we understand and trust the insured? I had a situation where I was acting as a consultant for a church that I was a member of on the bus, on the insurance committee. And I asked another agent to provide the coverage for those units to have symbol 1. The agent came back and said, we don't allow symbol 1, we only allow symbol 7. I said, well, I only think about 2 reasons that you cannot give us symbol 1. One is you don't trust the First Baptist Church of Fort Myers, Florida, to be honest with you, and 2 is that you're too lazy to audit. Please tell us which one of the reasons that you don't want to give us symbol 1. They came back later and said, we'll give you symbol 1. That's the key here. Symbol 1 can be used for any business that is not a proprietorship as long as we trust the insured will let us know about all the vehicles and we're willing to go back and audit. If not, then we'll have the more limited coverage that we have in symbol 7. Add 8 and 9 to use to any used other than one. That's hired and not owned. So that's included in one but not the others. You can use 10 to get rid of the broader coverage, again, to get rid of the personal vehicles. Watch the proprietors. Could be best to use 4 or 10, meaning getting rid of the personal exposure. The problem when using one, because of the personal autos owned, not used or insured by the business. That's the concern that you would have, the personal exposure. Watch 7 if yours. Must be described or no coverage. Must meet the timely requirement, meaning the 30-day requirement, if it's an additional vehicle or a replacement vehicle. If not, there could be no coverage at time of loss. Exposure for autos not owned or scheduled, hired and not owned. Protection for insured for autos not owned by the insured that is operated. That's the key word, operated, domain by the insured or for the benefit of the insured. That's the non-owned, meaning their employees. Symbol 1 includes use of these non-owned autos. 10 can depend on the wording of 10. You must add 8 and 9 to any other symbols to trigger protection for the insured's liability for autos that do not own. Special symbols, again, 3 and 4, those are for MedPay and UM. You could use symbol 3, personal vehicles only, or 4 to get rid of the personal vehicles if you had an individual. Remember, there's no cost difference to insured at policy inception. You have to explain the coverage before the loss. Make sure you get the symbols that you request from the carrier. If not, go back and discuss these with them. And so here, what you have to tell the insured is, and the best practice is, let us know about all the vehicles that you operate going in. And if you acquire any ones during the policy period, let us know about it so there's no gray area of coverage. But you do need to explain the difference from the insured between symbol 1 and symbol 7. And if you're replacing a policy with symbol 1 on it and you only can gain symbol 7, that's not necessarily bad. The bad part if you don't explain that to the insured. This is the end of the hour 1 of the presentation. We'll look forward to you participating in the future 3 hours.